Hello to everybody. FutureTrend is again with you. We are glad to present our view on major currencies, our analysis of major currencies and the foreign exchange markets for the date of 4th June 2018. So, on Friday, the payrolls report published in the United States was quite encouraging for those looking for more interest rate increases conducted by the Fed. For those who are looking for higher United States dollar and higher yield of United States government papers. Anyway, the picture this morning is a little bit different. Despite of the fact that both of unemployment rate or absolute number of employees, new employees, or even average hourly earnings index, all of them were better than expected. Anyway, the United States dollar is a little bit lower today, this morning on Monday. It's hard to explain this. Probably the market is overreacted to political crisis in Spain and Italy. Probably the market suggested that consumer price index published at the end of last week in the European Union, and as you know, this indicator was 0.3% higher than expected. The expectation was around 1.6% on an annual basis. Anyway, we had another number. We had 1.9% reading, and that's quite promising for the future European Central Bank policy decisions regarding interest rate increases and exit from ultra expensive monetary policy conducted at the moment by the ECB. So starting from now, it will be quite important how the members of the ECB will illustrate the current situation with European economy and with political crisis. So from that point of view, probably this week will not be for sure a dollar positive. Probably we enter a kind of consolidation or even correction period. Of course, a lot will depend on the United States trade policy, because from that point of view, the United States dollar, from our point of view, is looking a little bit vulnerable. We suggest that, of course, from the point of view of higher tariffs on imported goods to the United States inflation should be higher, and from that point of view, also interest rates in the United States should be higher. The reaction of the Fed should be more aggressive, and the United States dollar should also go to the north. Anyway, from the point of view of world trade volume of the world economy, that phenomenon is not good, and that means that in case of some more efforts in this direction, I mean, or in case of tougher stance choose by the United States regarding regarding trade relations, the world economy, of course, will suffer, and from that point of view, the United States dollar is not looking so promising like before. So that's why we still keep our long trade recommendation in the euro dollar. We suggest that the level 115 should now act as a kind of strong support. The low reached during previous trading week around 115.10 should now present a kind of tougher point to break. Probably this level should present, in case of retesting, a level of buying the euro dollar in case we really see a kind of correction or consolidation starting from now. That's why we decided to buy the euro dollar on a break of recent downtrend. and while above of it, and we still above of it, because this broken downtrend lies around 160 and 60. The euro dollar should remain supported in the very near term future. But for really change to really change the situation to the bullish side, of course, the pair should cross the level of psychologically important barrier 120, where lies the highs of at the moment the highs of the middle of May around 119.95, and where also lies moving average 200 daily line at the moment around 120.13. So from that point of view, the euro dollar should break above this level to change its situation to a better side and probably resume its uptrend that was in full power at the start of 2018. As regarding the dollar yen, we still keep a neutral stance regarding the pair, but we'll try to sell it on a possible retest of 110 level, where also lies psychological important barrier and moving average 200 daily line 110.18 at the moment. That's why we still suggest that it's time to short the currency at 109.80 with the stop above 110.05. At the moment the high was around 109.76 and a half. That's why we still short of a short rate recommendation. As regarding sterling, a lot of will depend of course on incoming economic data, and from that point of view today's purchasing managers index in the construction sector of UK economy should pay particular attention of traders, taking into account that the first part of PMIs in the manufacturing sector was slightly better than expected on Friday. From that point of view, if we see a continuation of more positive economic numbers publishing in the United Kingdom, that will mean the pair could find a kind of interim floor against the lows reached on last week around 132.0405. As regarding the dollar Swiss, from one point of view the pair should be victim of a political situation in Spain and Italy, and that means that Swiss crosses should remain under selling pressure, but at the same time, of course, better United States economic numbers should support the currency, and we still suggest that it's time to wait a little bit lower to probably to retest moving average 200 daily line located at 97.04, and also here lies quite important barrier of 0.97. Probably in case of another let's say step of this currency closer to this line, it will be interesting not only to close existing short recommendation but also even to take an opportunity to enter some bullish positions in the currency, because from a point of view of short-term trading, the pair still remains buying on dips. Thank you very much for all of your attention regarding our analysis. For those looking for opportunities to trade some other pairs, here it's our analysis of euro crosses. We still suggest that it's a little bit tricky at the moment to play in this kind of pairs. because the situation now is really tough, where the currency will go. Because from a point of view of reducing risk aversion sentiment in the global financial markets, the euro crosses should remain supported, but in case of direct worsening of the political situation, for example, in the European Union, of course, that will mean that euro crosses should remain under the selling pressure. And at last, you can see our analysis of commodity currencies. We're still missing any kind of positions, but also here the situation is a little bit interesting, especially in such kind of currencies like Australia dollar, because first of all we are near an important barrier of current downtrend in the currency that lies around 76.40. Also today, not today but during overnight hours, but to say the truth, in the morning, early morning tomorrow, Royal Bank of Australia will decide the future of its interest rate policy, and also from that point of view, Australian dollar should remain very volatile, we suggest. Anyway, we suggest that at the moment it's a time to buy a pair on any kind of downticks closer to its immediate uptrend located at 74.90. Probably the same applies also for the Kiwi dollar and the dollar Canada. Dollar Canada, we still suggest it's a sell on a possible retest of a longer term downtrend line that's located at the moment around 130.45. Thank you, ladies and gentlemen. See you tomorrow. It was your Future Trend channel.